Hello, welcome to STEM 2.5, Exchange Rates, Demand and Supply, Changes in exchange rate. So this recording is going to look at the syllabus dot points, factors affecting demand for Australian dollars and supply of Australian dollars, and in addition to that, changes in exchange rates, depreciation and appreciations. So let's have first factors affecting demand for Australian dollars. So you have to remember, demand for Australian dollars is determined by foreign people. So demand for Australian exports is the first factor that will cause demand for Australian dollars to fall or to increase. So if more of our exports are going overseas, if demand for our exports increase, that means that these people have to pay in Australian dollars, so therefore demand for Australian dollars increases. Vice versa, if Australian exports decrease, then demand for Australian dollars will actually decrease as well, because they don't need to pay for our exports because there's not many going out. Second dot point, tastes and preferences of overseas consumers for Australian exports. So this is linked to the first one, but if the taste and preferences for overseas consumers change, then our exports will change accordingly, and this could be for a variety of reasons. It could be seasonal, it could be just the trends. People don't particularly want the products that we make anymore, and preferences could be that they want it cheaper, or getting a cheaper product from somewhere else. The third dot point, changes in world economic conditions. So we saw this in the global financial crisis. In 2008-2009, we saw the Australian dollar drops quite significantly in that time period because around the world, the economic activity around the world decreased, and therefore people weren't spending as much money around the world, so exports decreased in general. So that had a huge impact on our exports and demand and investments and investment flows in and out of Australia. International competitiveness is also another point affecting demand for Australian dollars. If our international competitiveness increases, therefore our exports are cheaper, so people demand more of our exports, so therefore demand for Australian dollars goes up for foreigners. And also, if our international competitiveness actually decreases, then we'll see a decrease in demand for Australian dollars because overseas people will actually go elsewhere to buy their goods and services. That moves on to factors affecting supply of Australian dollars. So the supply of Australian dollars is determined by Australians, or money coming from Australia out of Australia, going out of Australia. So the first one is demand for imports. So that's Australians' demand for imports around the world. So if we increase our demand for imports into Australia, that means that we have to pay those people overseas in their currency. So we pay for, let's take US for an example. If we're importing things from the US, we need to pay in US dollars. So how do we change that? Our Australian dollars. So we need to change our Australian dollars into US dollars. So we sell our Australian dollars in the forex market, thereby increasing the supply of Australian dollars because we're buying US dollars. Likewise, if our imports actually decreased, we won't be selling as many Australian dollars on the forex market as well. So the level of financial flows out of Australia is another point as well. So if we have a lot of investment going out of Australia, or we see a lot of profits going out of Australia, we'll see the Australian supply of Australian dollars increase on the forex market, thereby depreciating that value. Inflation rates. If our inflation is increasing in Australia, that means that our products are a lot more expensive than the imports, so therefore we'll see a supply of Australian dollars increase because we'll be importing a lot more because the prices in Australia are increasing. Likewise, if our imports inflation actually decreases, we won't demand as many imports. Speculation is those people who are buying and selling foreign currencies, trying to make money off it in the short term. So if there's an increase in speculation, the Australian dollar is going to go up, so people are going to flood the market and buy Australian dollars really quickly, and therefore affecting the supply of Australian dollars on the forex market. So this moves us on to changes in exchange rate and appreciation. Appreciation, increase in value of the Australian dollar. Never call it an increase in Australian dollar, it's an appreciation of Australian dollar. So if we look at the 2 points here, the first 2 points here, so there's only two real reasons why an appreciation will occur. So the first reason is that an increase in demand for Australian dollars. This causes an increase in foreign demand for Australian dollars. So those factors, we'll go through those in about a minute. And then the second factor is a decrease in supply of Australian dollars. This caused by decreased demand for Australians of imports, and also decreased investment overseas. So let's take the first one, first panel here. So if we see an increase in exports of Australian dollars, we will see the supply curve move from D to D1 because there's an increase in demand by foreigners for our exports, so therefore they need to pay Australians in Australian dollars, so they flood the market, they demand more Australian dollars, so therefore we see an increase in the demand of Australian dollars. So this causes us the original demand curve at 0.5 to at new equilibrium at 0.6, so therefore increasing the Australian dollar by appreciating the Australian dollar by 10 cents. The next way in which we can do it is actually decrease in supply. Okay, so we can see this as a decrease in imports into Australia. So if we have demand curve S here, and then we decrease the supply of Australian dollars on the Forex market because there's not as many Australians actually selling the Australian dollars on the Forex market, then we'll see supply curve shift to the left and therefore increase appreciating the Australian dollar. It's straightforward. So any cause that causes an increase in demand will cause an appreciation of the Australian dollar, graphed here, and any decrease in supply of Australian dollars will cause an appreciation as well. So there's only two reasons why the Australian dollar would actually decrease. So appreciate would be an increase in demand for Australian dollars and a decrease in the supply of Australian dollars. And that leads us to a depreciation in the Australian dollar. So this is a decrease in value of the Australian dollar. So vice versa, there's only real two reasons for a depreciation of the Australian dollar. It's a decrease in demand for Australian dollars and an increase in supply of Australian dollars. So if we take this graph here, if we see a decrease in exports from Australia overseas, so we have this original demand curve that will decrease Australian dollars because there's not as much demand on the Forex market for Australian dollars because our exports have decreased. This will cause the depreciation of the currency from 0.5 to 0.4, and we can see the quantity demanded of Australian dollars down here decreasing as well. Likewise, if we see an increase in imports into Australia, then that means that the Australians are actually selling Australian dollars on the Forex market and buying US dollars or whatever currency they're using to actually buy their goods and services from overseas. So that increases the supply of Australian dollars, so shifting the supply curve out to the right, and you can see a depreciation in the Australian dollar from 0.5 to 0.4. So that's depreciation and an appreciation and one movements as well. So in summary, factors causing changes in Australian dollars, as you can see here, the appreciation. So increase in interest rates, decreases in overseas interest rates. An increase in Australian interest rates would lead to more capital flows coming into Australia because people are trying to have a bigger return on their investment, so they'll send their money over to Australia and try to invest, and then we'll see an increase in demand for Australian dollars. Likewise, if Australian interest rates have stayed the same and overseas interest rates are decreasing, people will flood the Australian market, which is what's been happening over the last couple of years. From 2013 through to 2015, we saw that happening. Investment opportunities is closely linked there, so increased investment opportunities will cause an appreciation. Increase in commodity prices will cause an appreciation of the Australian dollar because people have to spend more money to actually pay for us. Increases in terms of trade, which means that our terms of trade is improved, so therefore more people overseas are buying our goods and services. International competitiveness increases. We said this already, so therefore people are buying our products because they're cheaper. Decrease in inflation in Australia, so we see people actually buying more from overseas, decrease in inflation in Australia. People from overseas see us as a little bit more stable, so therefore they'll invest into Australia. Increased demand for Australian exports. Okay, so this will all be cause an appreciation. Depreciation in Australian dollars is just the reverse. So decreases in interest rates will lead to people not investing into Australia, and increase in overseas interest rates will lead to people investing overseas because there's higher returns on those countries that have higher interest rates. Decrease in investment opportunities in Australia, just the reverse from the other side. Decrease in prices of commodities, decrease in terms of trade, decrease in international competitiveness means that people, overseas people will actually find cheaper products from overseas. Increase in the inflation rate, people won't invest into Australia because they will see inflation is getting out of control in Australia. So that's a key indicator of the economy not travelling so well, and increased demand for imports into Australia by Australians.